What's up, Tesla family? It's Ray J back with another video. And in this one, I want to break down what's happening with Tesla, SPY, Nvda, the QQQ, and a couple of other tickers. I'm going to break down what's happening with the economic calendar moving forward, talk about some big news involving Tesla and what you should be watching for as time progresses. But let me just mention that I am not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please smash the like button. It not only benefits me, it benefits the entire community as a whole. Anyways, for Tesla, we got this nice little pump all the way up to this 228 area to trigger stops. This was a nice grab of liquidity. And then what ended up happening was we saw this nice dip afterwards. So the market came down, so did Tesla. I wouldn't necessarily turn into a big bear quite yet because we're still holding this trend line right over here. And Tesla still has a very promising looking cup and handle like structure that could be forming. This could just be the handle for a nice little bounce. But whether or not that happens depends on some big factors. Now, for the short term, for tomorrow morning, I think that Tesla might dip a little bit, especially when we look at the technicals. They do suggest there might be a little bit more downside coming for Tesla, for Meta, and many other tickers. But whether or not we get a bigger dip or a big bounce will also depend on something very important. So tomorrow is going to be Wednesday, August 21st, 2024. There's not really much data coming out in the daytime. We just have a bunch of oil data, gasoline data, and very, very minor mortgage-backed data. It's all very, very minor, nothing too serious. And then at 11:30 a.m., we have the 17-week bill auction, which is kind of minor, nothing too crazy. At 1 p.m., we have the 20-year bond auction, which is kind of minor. And then we have something very important after all of that. We have at 2 o'clock p.m. Eastern Standard Time, the FOMC minutes. This is going to be huge for the markets. Why is that? Because it's going to give us more insights from the Fed. Now, the FOMC minutes is not an FOMC meeting. It's very different. It's actually just a report from the FOMC meeting. Why is that important? Because it's going to give us more insights, more data, more information from what the Fed wants to do, more insights on what different Fed officials are thinking about interest rates, and it's going to cause a very, very big move. So if a lot of these Fed officials are saying, we're going to do a 25 basis point cut to open to the cut, the market could still see a nice reaction to that. Right now, the market thinks there's a 67.5% chance we get a 25 basis point cut, and there's a 32.5% chance we get a 50 basis point cut. Now, just note, guys, that if the Fed says something like, hey, we don't know what's going to happen, we have to wait on the data, it's too early to say if we're going to cut. If they start saying that, that's going to be a little bit more negative for the markets. If they are more fixated on a cut, the market may see that as more positive. That's going to be causing a very, very big reaction. The market's currently more neutral, a little bit closer to fear. Are we going to become greedy and get a big bounce, or are we about to see more fear? One thing you guys have to remember is that all this data is noise, okay? It's noise, but it is important to know what this noise is. What do I mean by that? The market is based off what on earth these market makers and institutions are trying to do. Now, the data could be decent, it could be bad, it could be whatever, and they're going to cause a big move and use the data as an excuse to move the markets like crazy. You have to remember this. Sometimes you get a good CPI, the market pumps. You get a good CPI, the market pumps and dumps. It's all based off their manipulation. So I'm going to be open to a lot of manipulation tomorrow, and they're going to cause a very, very big move depending on the data. Will they pump things like crazy? Will they dump things? It depends on what they want to do, and I can't predict that perfectly. So I will tell you this, we do look a little bit more bearish right now. The market may dip a little bit, but whether or not we get a big bounce or a dump depends on how these institutions try to react to the FOMC minutes. And we'll just have to be very patient with this one. I'm unfortunately not a fortune teller. I can't make promises about this, but I can tell you that there's going to be a big move. I'll talk about what that move is in just a couple of minutes. So going back, the market is quite neutral. Momentum is still quite greedy right now, as we're still seeing buyers who are present, especially since the puts and call option positioning is still dipping. So this is showing us that there's still a lot of buyers. There's still a lot of people buying calls, thinking the market will try to bounce. Will the market makers try to screw them over and cause the market to dip, or will they do the opposite? We'll just have to wait and see. And finally, the VIX is trying to break the 50 daily moving average. We'll see what kind of reaction we get. Now, when it comes to other factors, I just want to mention that Lowe's had earnings in the morning. They didn't do too well. The share price dipped because they had to cut their guidance. And then Toll Brothers had earnings today. They did pretty good. Tomorrow we have Target, Macy's, and TJ Maxx, and lots of retail announcing earnings, not to mention Peloton and Ross. So what's happening with Toll Brothers, just to be very frank, they did relatively well. They raised their 2024 guidance, and their fiscal Q3 earnings have topped the consensus. That's a good piece of news. They beat on their EPS and barely met on revenue. Good for them. You guys can see it right over here. Not bad whatsoever. And then revenue was just barely topping estimates with good guidance. So that's why the share price is up for this. So if you're interested in playing the chart for tomorrow, you guys could. Going back to Tesla, now I just want to focus on Tesla. Tesla has some news that's been making a lot of headlines about how it's hiring workers for up to $48 an hour to wear motion capture suits to train its Optimus robots. So it's very, very cool stuff in my opinion. The job is quite demanding, though. I read that they have to be working potentially for over 7 hours, once again, using the equipment, moving around, and maybe even holding heavy objects that weigh about 30 pounds. So they have to be doing that. It is quite demanding, and they're going to be paid between 25.25 and about $48 per hour. So that's worth noting. I think this is important because it's showing a lot of contributions being made for Tesla, a lot of growth in the Optimus sector, and that's a very, very big catalyst for the long term, according to Elon Musk and such. So we'll see how things go. That is a good development. There's also a lot of news about a Tesla semi that crashed and caught fire on a California highway. That's very important as well. I mean, of course, the batteries are very powerful, and kind of like getting rid of the fires is very difficult. So that was very, very close to Nevada. It was actually in California on I-80. So not the best of news, but once again, hopefully the fire was out and hopefully no one was too negatively impacted. So we'll see how things go with this. I just wanted to talk about how there was this crash that happened. The driver had to go to the hospital. Fortunately, they survived. So that makes me happy to hear. So we'll see how things go. But this is something worth noting. It's making a lot of headlines, and Tesla's coming up with new methods to kind of like get rid of these, to help extinguish the fires. Excuse me. For volume, 73 million is volume, a little bit below average. Short volume is still trying to increase. And then Piper Sandler gave Tesla an overweight rating, saying Tesla will outperform the market. That's a good piece of news. Short volume has been going down, whereas the price price ratio is going up just a little bit. We're starting to see some attempts to bounce on Tesla. It's trying to outperform the market. We'll see if that holds or not. Wednesdays are known for being green only about 48% of the time, and we tend to see more volatility at 1 p.m. Anyways, let's go back to the charts now. I just want to focus on this. What do I see for the charts in my personal opinion? The answer is very simple. Tesla looks a little bit more bearish, and it looks to me like we might dip if we don't hold 220. So look at resistance at this 220 area, since technically we are below this in the after hours and we're showing some weakness. If we lose this 220 area, we're going to be dipping. If we reclaim it, look for 222. And if 222 breaks, look at the imbalance towards 223.25. So watch resistance at those levels. If 220 fails, this will be tipping all the way down, in my opinion, closer to about this 217 area, then eventually 215 at our 20 EMA. So watch those supports and resistance levels. What do I think Tesla's going to do? If you look at this, we're forming kind of like a cup and handle like structure. We got this big rejection, and then on the daily, if you look at the daily like this, you guys can see that Tesla's looking a little bit weaker. So I do see a risk of this potentially dipping lower on the daily, and then the 4 hour is also contracting. So I do see a risk of this dipping too. So I personally think that this might tip a little bit lower, all the way down to this 217 area. I think there's a risk of some downside for Tesla, but but whether or not this downside lasts depends heavily on the FOMC minutes. So I think what's going to happen is approaching the minutes, we might dip just a little bit, get very close to this 217 area, then consolidate, see a lot of shuffling. And then when the minutes come out, Tesla's either going to see a big bounce or a big dump, depending on what the Fed announces. And that's something I can't truly predict. It depends on what they say. So I think Tesla will dip a little bit approaching the big data, and then we'll see what kind of reaction we get from there. For SPY, we're at support on the 1 hour 20 EMA at 558.25. And looking at the 4 hour time frame, we have support at 558. And then if that fails, 556 is going to be our next target. If we break past 560, look for a rebound. Looking at the chart, the 4 hour is showing contraction, especially as volume is dipping. So this is favoring a move back down to 558. I think we might shuffle a lot, but there is a risk of us dipping closer to 556. I could see this dip a little bit towards this imbalance. So the chart looks a little bit more bearish to me heading into tomorrow. Whether or not we get a big drop and lose 556, or if we bounce off this 556 to 558 area, depends on the data. So break 560, we go up to 562.5 and turn bullish. Lose 556, we turn bearish. Otherwise, we're just range bound. My guts tells me this looks like it's going to dip a little bit more from a technical standpoint, right? Testing the previous breakout area around 556. We might get very close to the 556s, and then we'll see what the reaction is after the data comes out. For ES, it's the same thing essentially. We do have a slight bearish divergence, and we are kind of turning a bit. Look at this red bar right here. This is our breakout area around the 5600 area. Generally, we do end up testing these breakout areas. So this favors 5600 to be tested. will we bounce off that? Is possible, or if we lose this, we'll be dipping down to 55.80, then eventually lower levels like 55.70. I think that this might dip a little bit. I think we might see a little bit of a dip to 5600, and then we'll see if we get a bounce or not. But just be very careful with the way that this is looking. That's going to be very critical for how we end up moving. So look for a dip on ES, and we'll see if we bounce or not, and then be very, very patient nonetheless. For SPX, same thing. We're kind of flat right now. We're going to be looking at this breakout area around this 55.75 area. We could dip towards that, then we'll see if we get a bounce or not. If we dip towards 55.75 and then we get a huge bounce, the FOMC minutes could cause this to push to fill the gap above, back up. Or if we get the rug pull, so we might dip first, and then if the minutes come out and we get a rug pull, we could be dipping back down to the support in the 5500s. So be careful, guys. I think that we're going to dip a little bit tomorrow morning. Then we'll see what kind of reaction we get with the FOMC minutes. Part of why I say that is also because of Nvda. Nvda has this resistance around this 126.5 area. We're now kind of like losing that. So if we get above that, we'd be looking for 128, followed by 130 to 132. If we fail to hold 126.5, look for a dip towards 124.7, followed by 123.35. I think this is looking like it's dipping a little bit. It does favor downside back down to this imbalance. So I think the 124s are coming for Nvidia. It also aligns with this breakout area right over here in the 124s. So I think Nvidia might be coming down to test that level. And then we'll see if we get a big bounce or not, depending on the data tomorrow. So get ready for that. But so far, it does favor downside. Bitcoin's looking a little bit weaker right here as we got this rejection. We're also failing to hold above our 59,400 area, our 1520 EMAs. If we break through this, we'll be looking for 60,000. If we lose this, we'll be dipping all the way down towards lower levels, such as 58,500. Look at this big red, excuse me, looking at this big red bar that's forming. The 4-hour looks a little bit weaker on Bitcoin. Might see a little bit of a dip into the 58,000s, in my opinion. Now, we could dip a little bit, but like I said before, if we continue this dip or not depends on the big data, so get ready for that. For NQ, okay, looks a little bit more bearish. There's a slight bearish divergence here. You guys could see this, especially as volume is kind of going up for the bearish side. We came just under my target of 20,000. We came very close to it, but we didn't quite get there. So now we're starting to churn at that resistance. We did actually fill the gap at least. I think we filled the gap, but then we came short. So this, from a technical standpoint, looks like it's going to be testing the breakout towards 19,700 as the most likely target. If we break past 19,850, we could try to turn back up. Otherwise, the chart is favoring 19,700 flats and a little bit more downside. That could also drag down the QQQ. So this favors downside for a bit. We might dip towards the 19,700 area, if not lower, and then we'll see if we bounce or not. That will depend on the FOMC minutes. For the QQQ, we're going to be looking at. Let me just double check this. 479 as one of our support areas. If we lose this support here, I think that we're at risk of dipping even more, and I think that we could be dipping all the way down towards. So if this support breaks in this 478 area, we're coming all the way down towards 475. I would say just under 475 to just under 476 to 475 around that area right over here where this imbalance happens to be. And then to be bullish, you want to see it break past 481.25. Got to get back above 480, then 481.25 to turn back up. Otherwise, this is favoring downside. I think we're going to be dipping to 478 and eventually these lower levels. I think that's looking more probable for the QQQ. Now, whether or not we get a big drop depends on the FOMC minutes, so we'll just have to wait and see. For Apple, we're looking pretty decent. We're still trying to fight at 227, so we're going to be watching this range. If we break 227, we could be pushing back up to about 228. If we lose that, look at 226 as support, followed by 224.3. We're range bound completely on Apple, so give it some time. Do we break past 227 and push, or do we lose 226? Give it some time. For others out there like Palantir, we look a little bit more bearish. I do see a test of 31.5 coming. If we bounce off this, that's going to be dependent on FOMC. We could be going back up to about 33. And if we lose this, we'll be dipping all the way down towards 31.5, if not lower levels like the 30.5 area. So I think 31.5 is coming. We might dip a little bit and we'll see what kind of reaction we get from here. For Supermicro, we're also dipping a little bit to look at support at 605. If we lose 605, we'll be dipping all the way down towards the 580s. This imbalance is going to fill. If we hold 605, we could try to rebound to 620. But in my personal opinion, I think this chart's favoring downside, and the high 500s are likely coming. This chart looks a little bit more bearish, just to be 100% honest, so I think we might be dipping a little bit lower. Now, could this be a trap? It's possible, but for now, I think we might dip for now, and then we'll see if we get a bounce depending on how things go. For Rivian, we look a little bit more bearish. I've been saying this for quite some time. Why do I say that? Because of this right here. We have a bearish looking wedge that's developing just like that. So if we lose the support here, we'll be tipping all the way down towards the 12.5 area. We also happen to have resistance around this 13.97 zone. This chart is favoring move all the way back down to the 12s. So we look a little bit more bearish. For SoFi, 7.5 is going to be our resistance. And we also have support at 7.25. If we lose that, this could still be forming kind of like a cup and handle. I see this on both the IWM and also on Tesla. So it's doing a good job at holding up, but we're going to be watching the support. If I extend this like this, you guys can see there's still the support trend line that could be tested. So I think we look like we're going to be testing 7.25. If that fails us, we'll be dipping all the way down to 7. So I do see a test of 7 potentially coming. And that might actually align with this trend line. See this yellow trend line right over here. That's going to be the first level to watch for. So I think we could be testing that. For the IWM Russell 2000, we got to reclaim 215 to turn back up. Otherwise, we're at risk of dipping. I think we look a little bit more bearish. I do see a risk of us coming back down towards 211. If that breaks, we're going back down to 210. If you hold this, we could try to rebound. This is still suggesting that downside might come. We might test this trend line. So I think we're going to be testing 212. If that fails us, we're going down to 210, and we'll see what kind of reaction we get as the 4 hours looking a bit more bearish. For AMD, we're looking more bearish as we grab liquidity right over here. If we break past 158, we could be turning back up towards the 160 area. If we reject here, we'll be dipping all the way down towards, I think that there's a risk of us coming down towards 153.5, followed by 151.78. So I think AMD will be dipping lower. I think the direction is going to be down, and I think we might be approaching at least 153 tomorrow. And then whether or not we bounce or not depends, as you guys know, on FOMC, on the FOMC minutes. So we'll see. For ARM, we have a bearish divergence. We're losing support here, so I see a test of 127 tomorrow. If that fails us, we're going down to 125. If that holds, we could rebound. We'll look for a little bit of downside and see if we get a bounce or not. We still have that bearish divergence. For Coinbase, look a little bit more bearish off this big red bar. This is favoring 192. If we get back above 200, we could bounce. Otherwise, we are suggesting that downside is looking more favorable. I think this also depends on Bitcoin. We've been tracking Bitcoin really well for the last couple of days. So I think we might be getting very close to 192 again. This suggests that downside is very favorable. For Amazon, it's very flat. It's doing a good job at holding up. So this is outperforming the market. Look at resistance at 180 and support at this trend line. I think we might just consolidate a bit and get very close to the trend line, and we'll have to see if that breaks or not. I think whether or not Amazon gets a big move or breaks depends on FOMC minutes. So we'll see what happens with the minutes reports, and then we'll have to see how things go. So in my opinion, we just have to wait on Amazon. We're just very flat. It's going to just consolidate. Meta looks a little bit more bearish because we have a head and shoulders like structure. We have a left shoulder here, we have a head and then a right shoulder. If we dip towards 524 and we lose that, we could be looking for a dip all the way down towards 516. Well, technically it's 520 and then 516 because 520 is where we had the breakout. This is the support right here. And then if we break 530, we turn back up. This looks like a clean head and shoulders. We look a little bit more bearish right now. So the chart does suggest that 520 is coming, maybe a bigger dip. So Meta looks more bearish. We have a head and shoulders, nice looking structure. For Microsoft, we're pushing. We're still bullish, but it depends on this test of resistance at 425. That's going to be our 200 EMA. If we break that, we're going up to 427. If we reject off the bearish divergence, we could be dipping down to 419, 423, and then 419. So we'll be watching to see if we get this bearish divergence rejection. So give that some time. We're at some tough resistance on Microsoft. Google looks a little bit weaker. We hit this 170 area only to reject. If we fail to get back above that, we could be dipping back down to 168. If 168 fails us, 166 is coming, so watch those levels very carefully. There is a risk of us dipping a little bit, so just be very, very careful. For Google, GameStop, we're looking at 22. If we lose 22, we could be dipping down towards 21.5. There's a risk of some downside. For AMC, we're just consolidating. If we lose 4.96, look for a bigger dip to this imbalance towards 4.82. If we break past 5.05, we could bounce, but this does look a little weaker. DJT is looking bearish. We are going to likely be dipping all the way down towards 20 into the 20 area, so it looks bearish to me. The VIX is trying to rebound. Look at 16.22 as a target for tomorrow. This suggests that there might be more downside for the markets. And then finally, we have the 10-year Treasury yield. This is going to make a big move depending on the FOMC minutes tomorrow. So we're just waiting to see if the Fed will be more hawkish or dovish and what they say about cuts. And finally, the dollar looks a little bit more bearish to me, but we're going to be watching to see if we get a bounce. This might make a big move depending on the FOMC minutes. So it all depends on that. So it looks like the market's big move depends on the FOMC minutes. Will we get a big bounce? Will we see more contraction? Depends on lots of different factors. As far as Tesla goes, I haven't really seen too much major news that's been coming out. It's been very minor for the most part, and then we'll see how things go from here. With that being said, I just want to say I appreciate you guys so much for listening. Please have a great day, night, or evening wherever you guys are. And just note that the FOMC minutes will be key for tomorrow. Yes, we could consolidate and dip a bit in the markets tomorrow morning, but whether or not we get a continuation of the downside or a big bounce will depend a lot more on the minutes. So get ready for that at 2 o'clock p.m. Eastern Standard Time tomorrow. Thank you for listening. I'll see you guys again tomorrow before the market opens. Have a great rest of your day and peace out.